Markets move. The world takes notice. This is Next Money Signal, your daily briefing for those who make financial moves that matter.
Welcome to the Deep Dive. Today we're digging into the Spanish banking scene.
That's right, specifically BBVA's big move on Sabadell.
Exactly, this proposed $14 billion acquisition. We're using the May 13 financial briefing for Spain's banking sector as our source material here.
And the goal is really to understand what's happening, the key factors, and, well, what the fallout might be from this.
So the central question, what's really driving this takeover bid, and what could the consequences be for Spain?
Well, it's definitely more than just two banks getting bigger. This could really reshape the financial landscape there.
A major shakeup, as the briefing calls it. That $14 billion figure certainly makes you pay attention.
It really does. It signals something significant is potentially underway.
And we saw reactions almost immediately, didn't we? The Spanish government voiced concerns pretty loudly.
Yeah, they did. Their main worries seem to be potential job cuts, for one.
And competition.
And definitely reduced competition. You know, fewer big players, potentially less choice, maybe higher costs down the line. That's the fear.
But then the briefing also brings in the view from the Spanish antitrust chief. A bit different.
Quite different, actually. Their take seems to be that, well, the market's competitive enough right now.
Meaning they think it can absorb this merger without things getting uncompetitive.
Essentially, yes. They seem to believe there are other strong lenders out there, so rivalry will, stay healthy enough.
Which makes you think about who those other players are. The briefing mentions Caixa Bank gaining ground.
Right, particularly in small business lending, and specifically in Catalonia. It notes Sabadell's share there might be shrinking a bit.
So is BBVA's move partly about that? Maybe shoring up their position against Caixa Bank?
That's a really interesting angle to consider. It suggests the market wasn't static. Things were already shifting. Maybe this is a reaction, a strategic play in that context.
Okay, so you've got the government worried, the antitrust body less so, but regulators have actually approved the takeover.
They have, yes, but, and this is important, with some pretty strict conditions attached.
The strings were the key ones.
The big one seems to be about Sabadell's small business clients. BBVA has to promise to keep their working capital lines open.
For how long?
For at least 3 years, and there's even a possibility of extending that to 5.
Okay, so that sounds like a direct response to those government concerns about smaller businesses getting squeezed.
It certainly looks that way, a specific measure to try and cushion that potential impact.
So if this all goes through, what does the Spanish banking landscape look like? What kind of player does this create?
Well, putting the pieces together, the combined BBVA Sabadell would become Spain's second largest bank by loan volume.
Second largest. Wow. Who's number one?
Only Caixa Bank would be bigger. So you're looking at a significant concentration of lending power there.
And the government isn't just letting this happen quietly, despite the regulatory approval with conditions. They launched something.
Yes, a public consultation, which is apparently quite rare. They really want to examine the future of Spanish banking.
That signals pretty serious concern, doesn't it? Going beyond just this one deal.
Absolutely. It suggests they want broader input, a deeper look at where the whole sector is heading, especially with this trend towards consolidation.
And that trend is pretty clear, right? The briefing mentioned how much consolidation has already happened.
Oh, definitely. It points out that before the 2008 crash, there were over 50 banks. Now, just 5 giants control something like 70% of the market.
70%? That's a huge shift.
It really is. And that historical context is key to understanding the debate around this BBVA Sabadell deal now.
So it boils down to a fundamental question then.
I think so. Does this kind of mega merger, this ongoing consolidation, actually make the banking system stronger, more resilient? Or does it go too far, limiting competition, maybe creating new risks?
Right. Okay, let's quickly recap. We've got BBVA's huge $14 billion bid for Sabadell. The government's worried about jobs and competition.
While antitrust officials seem less concerned, feeling the market's robust.
Regulators gave a conditional okay, focused on protecting those small business credit lines.
Which, if it happens, creates Spain's number 2 bank by loans behind Caixa Bank.
Prompting this big government review amid this backdrop of, fewer and fewer big banks controlling more of the market.
Exactly. Which leaves us, and you listening, with something to think about. When we see this kind of consolidation in really vital sectors like banking, does bigger always mean better or more stable? Or are there hidden dangers when you reduce the diversity in the market? What might this trend in Spain tell us about where financial services could be heading? Maybe not just there, but elsewhere too.